Okay? So even though on a 15-minute, this is the euro now, on a 15-minute you got a lower high, lower low, and you're sitting on the central pivot point, even though that's the case, when you go to an hourly, this is not a lower low. Okay? It's a lower high, by the way. Very nice looking one. That was the reason we got in. But that being said, what do you think happens now? Most likely. Right? It's probably going to get bought somewhere soon. Now, what I'm getting at is wherever that somewhere soon is if you get up to sort of here, anywhere, and fail. How do you feel about shorting this at least down to 132, if not a little lower? A lower low. Anyone? So we're not where to do that now. Right now we're approaching the zone where bulls are going to try to long it, and I don't blame them. Yeah, I'm going to go for that plan. So that's pretty much my day wrapped up. And I like what I'm seeing on the 4-hour Stoke cycle. The thing that I do not necessarily expect to happen here is I don't know that we drop that far today. Today, but this week we might, because I'm looking at the 4-hour, and I think there's a chance we might not higher low. So I could see this might not lower low. I mean, I could see this drop. This is, let's say that drop turns out to be, I don't know, whatever that is, 65 pips. I could see the second drop also being, say, 65 pips. You follow? Oliver, you know what I'm talking about here. We talk about a lot in class, same distance and all. So I could see that happening, and notice that that is not a lower low. So in other words, I could see this happening here. And that second run is just as much as the first one. Yeah, and then I could see it going long again. All the way. You see what I mean? Any questions about that? Now, what is one thing you should pay attention to today? You should be watching this index. Not a bad little pre-London after all, but it did start a little late, like we did talk about. But hey, it's not a million pips, but it's good. And this is the hard part for a trader. And I'm sure there are some of you right now that don't know what to do, and I can't tell you the right answer. And what I mean is, I think a lot of us in the room, I'm just going to use the euro for example, but it might be the other pairs, but most of us shorted in here. Is that fair to say? Whether it be euro, pound, Aussie, whatever. The question isn't that short. The question now becomes, you're in the short and you're trying to get down to here more, right? That second target. To get to that second target, you have to be willing to endure the entire rehash of the first target. And that is not something that you should be doing on the fly. Is this anyone in this room? This is not something you should be doing on the fly. This is a decision you have to make where. Are you making that at A or are you making that at B? At what point in time are you making that decision? And in fact, I would say probably even back here you're making it well in advance. I don't care if you turn out to be right or wrong. Before the entry, correct, is the right answer. Before the entry, you have to decide, okay, where am I trying to take this? And if I'm trying to take it to here, the third target, or the second target, that's fine. But do you honestly expect it to do this? It'd be great. And there are times that does happen, but the likelihood is thin, yeah? So what you really expect is this, right? Ish kind of thing. So you have to go in knowing that, believing that, and you have to make a choice. Am I going to get out completely there, or am I going to let that endure with a break-even stop going for here, which possibly risks the entire trade? There's no right or wrong answer to the question, though, and that's what I want to express to you. All right? There's nothing wrong with either one, but what's wrong is most people don't do either. Most people will get in, They'll see both targets. They won't plan their exit as part of their trade plan. And what do you think they do? They get down here and they're like 30 some pips in profit. Like, oh yeah, it's great, it's great, it's great. And then all of a sudden they're 40 pips in profit. They're looking at the second target, and then where do you think they end up getting out? Anyone? Yeah. They end up getting out right here because they're like, oh man. Price comes back and they're like, I was just 40. Oh, wait, I don't want to walk away with nothing, right? I was 40 pips in profit. Now I'm 20. Now I'm 15. Oh my God. Oh, I need to walk away from something. And then they close it. They close it. And inevitably, what's the next thing that occurs? Bada bing. Mofo. So what I'm saying to you is, if you are going to take profit, make damn sure it is in one of those zones and not at the top of a frickin' pullback. You can't have your cake and eat it too. Silly saying, I know, but I think you get my meaning. You can't protect the entire trade and then also get the second portion of it. I mean, technically you can, but it's risky. And the way people do that is when it gets down here, they'll buy it, and then when it gets to the pullback, they'll cut the buy. Okay? Meaning they hedged their way while it pulled back, and then they stay in. The problem with that is what happens if this move does go through, which does occasionally happen, then you get destroyed. I highly discourage you from doing that. It's not necessary. You're overcomplicating things if you do that. Is there really anything wrong with being wrong? No. Just pick one and be a pro at that one thing. Don't be half-ass at everything. Be a pro at one or the other. Right? To clean this up, if I go to a clean chart here, and you have an area of support or resistance. See, this is resistance here. Let's say this is another level. We'll see that one's a little skinnier. Let's see this one's a little wider. Oops, sorry, my mic. And let's say the distance here is I don't know, 60 pips. Let me make it 50. I don't know why that pen was so thick. And let's say this one's 50 pips. And we're going to say, for argument's sake, and I know you mentorees have seen this before, that this is a short, all right, which means, let's say it's fibbed up and it's come up and you short it and your targets are one of these two, right? There's no reason to doubt it getting into those zones. Am I right, guys? If you're taking profit anywhere sort of in this business, here or here, pardon my language, but you're probably a complete idiot. And as far as technicals go, or inexperienced, then don't take that derogatory. Chris, you call me an idiot and tell me not to take it derogatory. But do you know what I mean? And it's not idiot as in stupid. It's an idiot as in there's something, you don't really have a complete plan. Maybe you're just fearful. I'm just going to say it. I mean, I'm sorry. I don't understand that. But there's a lot of people that do it though, Aaron. They'll get like plus 10, and the moment that red candle starts to do this right here, they take their money. And you know what? I'm not going to sit here and say you can't make money doing that, because you absolutely can. It's just not my style. It's not just a confidence thing. For me, it sounds like a confidence thing, but I'm sure there's plenty of people out there that could make the argument of, oh, well, I make 10 pip trades a day. Well, good for you. You see, to each their own. But all I'm trying to say is, from a point of resistance here, support here, very identifiable on different time frames, different sizes, there's really no point of mucking around in between those levels. Simply put, buy off support, sell off resistance, correct? I don't really care what strategy you use, 10 pip or not, you still want to buy off support and sell off resistance. Yeah? So with that being said, if you shorted up here, we'll make that a red box anywhere, Aaron says perhaps they're over leveraged or paranoid. Yeah, well, that's another problem, isn't it? I mean, that's somebody who's over leveraged is an idiot. So I've got all kinds of emails and arguments coming now. So anyway, my point is though, if your plan is to short this and you feel highly confident that it's going to get from point A to point B, that's great. But it's not that you don't see C. You're going to use your analysis to determine if C is possible. But the likelihood that it just goes to C is thin, isn't it? It's far more likely to do this to some degree, at which point fibs make this an area of sort of roaming resistance that wouldn't otherwise be there. Agreed? Which may or may not overlap with something like a, I don't know, 21 EMA. Oh, I've seen that before, right? Ever seen this? To help it along, sort of creating its own level of short-term resistance that back here did not exist. I never said you wouldn't move your stop, Raji. If you're 50 pips in profit, you should not be taking a loss anymore, especially unless you're planning trades off a daily chart or something. Turn this, trade the news down. But here's the thing. If you back here, when you were planning this short, determine that you're not taking profit at B, okay, then you already should be planning what, guys? Not just, you said, I'm going to take my profit at C. What should you be planning then? Before the entry. Right. You should be planning the management of this first portion, right? Because it's likely to pull back. So you'll say, you know what? My support zone is let's say this is looking at the scale here. Let's say that's about a 15 pip support region. Is that reasonable? This one here is clearly much bigger. This one here is like freaking 30, whatever, 32. And this one here might be 20, 22. Okay. So what could you use if you know it's going to get down here? I mean, sometimes stuff can get right in front of support. I would argue that when you're about 10% in front of support resistance, that's when you have to start looking out. Anybody else can attest to that? So there are times it can stop just short. So when you're making your plans, right, you should probably make the plan from the worst possible place, the lowest portion of the resistance, which, by the way, if you want to be fair about it, we also call that as a fringe. And you would look at it from this perspective in the planning segment. You would say, from a fib perspective, where is the 786? And that would probably be right there, right? So you could plan ahead of time that your stop goes there. Is that reasonable? Remember, you're shorting here, and you're expecting that pullback. That doesn't mean you want it to hit your freaking stop. You want it to go short from about right here to C. But do you see how you're planning that in advance? Now, you will be wrong sometimes, won't you? And in that case, then fine. This is probably what happens here. And you get stopped. Maybe you walk away with 15 pips and you're kicking yourself. 50 pip positive, you shouldn't be walking. You should be walking away with something. But if you're going to go for this secondary target, you have got to be willing to plan that management ahead of time and plan that pullback ahead of time. But unfortunately, most people are naive and they don't. And they think they're untouchable. And then when it pulls back, they finally realize, holy crap, I was just 50 pips in profit and I've given it all back. And where do you think they're taking frickin' profit? I mean, just without fail, they're taking it somewhere in there. What in the world? And they walk away with their 22 pip trade. What are you doing? Right? If you're gonna do that, just take profit here, dude. And start over a new plan, right? Maybe you get in here again. New trade. If you can't do this, admit it to yourself. Don't lie to yourself. All right? So, how does all that relate to what's going on here? If you're trying to get down to this next area, which may or may not occur, you need to understand that this area was going to get bought. Since we were using zones earlier, see the high here? I would consider this is one zone. But do you see how? And I'll give you the barriers of it, so you see why I have it like I do. And looking at the bottoms here and the tops of these here, I would say this is a wider zone. It looks big, but it's not incredibly massive. From a four, it's more of like a 4-hour region. But I think it's reasonable, more or less, to consider that a zone. Would you agree? Based on the little example we just did. So, in order for it's very unlikely to do that, right? If it's now on an hourly, it may look like it does that. What do I mean by that? It may end up looking like this, and you're going to say, "Well, Chris, it did do that." But I'm here to argue that it didn't do that. If it fibs, it did not do that. Do you see? Which it's already doing. So I'm not here to tell you that it's definitely going down there, but you have to plan this sort of stuff. And I notice I stopped it at the bottom of the zone because once it enters the zone, you don't know what it's going to be. So in order for you to hold on to that, you would have had to plan to let this stuff happen. And that's what I meant by it's going to be hard to manage because it's not really a lot of pips and profit on this euro. Okay, later, Raji. Yes, by the way, I did record tonight, so I'll put it up. But I hope you got something out of this. Too many people that I've worked with in private coaching screw this up in the early stages where they never quite know to plan their targets. Planning targets and planning, forget the word targets, planning where you're planning to take profit is just as important as planning everything else about a trade. And you really got to learn that. And there are going to be times that you're just wrong and you see it all flip the other way. But be wrong, be right. Don't be in between. Is what I'm saying. So yeah, I mean, what is that? About 100. Oh, I know, because that Asia. So about a 75 pip sort of pre-London. If you took a few of them, if you only took one of them though, like if you only took the euro, you're either out at about 40 pips or you're protecting maybe 10, hoping for 100. Am I right? I don't know which. But one way or another, no matter euro, Aussie, or pound, or beast, you should have been able to make at least 30 pips tonight. Which isn't a whole lot, but, whatever. Every little pip counts, yeah? Any questions? Yeah, well, you see, Stokes said further, but I agree. I think, Paul, I think it's going to be a pretty effectively busy day, and I do mean like every market's going to have some stuff today. I'm not planning to really, like I did yesterday, I really didn't plan to sit around all day. Today, I plan to basically come back to the charts every couple hours and do stuff. So I think it's going to be a tradable day. I think we're going to roll up here at the open. I think we're going to try to roll up. I just don't know if it's going to work. In other words, maybe we're going to do this, and then if we fail to make a higher high on that cycle, I'll short it again.